Targets. Why do we do stop management and targets? Because you can use both. The same thought process works both ways. Looks like everybody's starting to roll in here, so we're gonna go ahead and get started. First and foremost, you should have already reviewed the video we have on um, once you've entered the trade, managing the trade. We're gonna try to do it one time. I think we'll do it on try to do it on Sim one time, guys. If we see a decent setup here, we'll try to do it on Sim. But um, again, everybody knows. Is there anybody that has any questions on the basic strategy of when we enter a trade and how to manage your stop upon entering? We want to focus on once you're already in a trade, having targets and stop management. So before we get started, questions on our basic thought process. So as you're newer with us, the basic thought process is you want to use, a couple contracts, multiple contracts, whether it's micros or minis. Get profits taken on if for instance, like if you're using 4 contracts, then you want to take 2 contracts, get some profits pretty quick on those 2 contracts between 8 and 12 ticks. The last 2 contracts you can put in a no lose situation, meaning that you could be even 3 to 5 ticks behind your entry and still have a positive money making trade in your hands. Any questions on that, guys? So that's like first and foremost what we want everybody to start with. Eventually, yeah, you want to manage your stops on your own, but to begin with, we try to get you guys to do some kind of auto break even. It gets you to a no lose situation. Any questions on that before we start, guys? Real quick. If there are no questions, all right. All right. So everybody knows that. Again, you want to enter a trade, take profits pretty quick. I was going to try to find a setup, kind of in real life that we could use. Doesn't look like the market's going to give it to us today. So what we're going to do is we're going to talk through this. So again, too many people, guys, we're using our 15 range chart solely to find entries, right? Okay, solely to find entries, and that's a 15 range chart. All the other charts we're using for confluence, right, guys? And finding trend and building our bias. So one of the biggest things that you can do is, maybe we can find a good entry to do this on, but targets. So first and foremost, we're going to do targets today. I'm sorry, stop management, which will lead us into the target conversation. So when you're trailing your stops, you have to know the current conditions of the market. So what's the easiest way to find out? And let's kind of blow this up. What's the easiest way to find out? Let's put a couple lines on our chart and we'll do it that way since we're not really getting a good trade set up right now to manage it, and we're not having right now we're not getting anything more than right like so 680-ish up to 725. Not a very big range, right? So let's start with that. So what are the three things you need to be, three conditions? Let's see if anybody can remember from previous classes. What are the kind of 3 conditions that we are need to be aware of once we've entered a trade and we want to manage a stop? Even prior to entering a trade, what are the 3 kind of basic market conditions we cover, right? So that's okay, Charles. You are given a pass on this one. 3 kind of conditions that we want to look for and know those kind of conditions going into. Okay, so we're pure trend. Okay, so William, we got market's trend. There we go. All right, we got a purely directional, which is a trending market. We have a trending market. Paul's got it right. So everybody write down what Paul said. Paul has, right? So there you go. Sharon, Paul got it right. So we're trending. We're either range bound or we're consolidating. And guys, if you really, really, really want to think about it, Is there any other condition you can think of that's going to happen in the markets? You're either trending one direction, you're consolidating, or you're purely range bound. The cool thing is we have pretty much all three of those on the chart right now. Trending down, trending up, sorry. So we come out of a range bound area back here, right? Now we're trending up and trending down. Have a little consolidation here. We have a little consolidation here. And then what's more common in the market is a trend up like this, where you'll see an up move, a down move that doesn't quite break the previous low, another up move, another retracement doesn't break the previous low, so forth and so on. That is really more indicative of most trend types, up or down, right? And then range bound. You start seeing the market play ball within a certain specific range. So, first, let's start with consolidation. How do you trail your stop when you are in consolidation? So, like right now, let's say we want to take a long trade on a W. Let's say we take a 16 tick real long, right? So, how quick do you think you should realize that you're in a consolidation period? How many let me ask this question. How many moves, ha- what would give you the first inclination that you're in a consolidating market? What would that be, guys? First inclination that we're in a consolidating market. Well, I'm gonna try to do this in a consolidating market. So let's try to do this on sim. Let's do a buy stop. And let's see if we could do chart trader hidden on this as well. And so let's say we're in a consolidating market. We see a little buy signal. We're consolidating, and our buy signals here. We'll try to do all of this at the same time. If I can do it today. Having issues all around the board. Look at me. Issues all around the board today. Try to get that trade. If not, so what is the first? Can't hear you. Should be able to hear me, Charles. There we go. All right, Marcia's got it. Shorter swing points, so you can look at it either way. Smaller swing points, 2 or 3 moves plus the same similar highs. And okay, that would be a range bound, Sharon. So 2 or 3 moves, same or similar swing highs or lows. That's going to be more of a range bound. So there you go, Kurt. Once we get into lower highs, higher lows, and that happens a couple times, now the first thing that goes to your mind is we're in a consolidated market, and we're talking about stop management. Let's say you get into a long trade like this, like we're trying to get into right now. This is hypothetical, not the best long signal on the planet, but you know what? Let's just cancel that because this is a silly thing to do to show for people. We're not going to put that on right now. So yeah, so you're looking at no new highs, no new lows when we're going into consolidation. All right, no new highs, no new lows. That keeps shrinking, if you will. Another way is you take maybe 5 or 6 candles and start seeing that the market is not making a high or a new low. That's chop, consolidation, sideways, whatever. Most people call it chop or consolidation. So, first and foremost, if you identify that you're going into some kind of chop or consolidation, what's the first thing you should think of as a trader? Maybe don't trade, right? Don't trade chop. Should have done that one, right, guys? Oh well. So we'll try to do it. Let's just try. Let's give it a try. Whatever. We'll give it the old college try, right, guys? Let me do it on this chart. Let's give it the old college try. See if we can get into a consolidated. Uh, actually, we don't really need to trade this. So you've got chop like this. You start seeing this. What do you want to do in chop? What's the first thing you do in chop? So now keep in mind, guys, sit on hands. But are you going to do nothing? Okay, so we're not going to take a trade. But what do you need to do? You could scout 5 to 10 ticks. You could do that using tick chart, pretty easy. But we're just talking about managing stops, stops and targets. Right. Look and see where you're going to be interested to trade again. Well, let's think about what we're looking at. So if I took a long trade here, what would I expect to get out of it? Well, you go back to what Bart said, right? Maybe you are really just trying. If you are trading in chop, then you need to have an 8 tick profit target, 10 tick, 12 tick max, 5 to 10 points. So if you're in chop, your stop and your target, are they going to be different or almost identical? Think about what I just said. So we're in chop right now. Now we'll back up early in the day and we'll walk through each of these because the market gave us all the scenarios. So your targets and stops, stop management, target management. If you're in chop, in sideways market, in something that's consolidating, and you take a trade, what is the difference between your target and stop? Probably about the same, right, guys? Does that make sense? Okay. So if you're looking for if you're in a trade and let's say you catch yourself, you didn't know it, you didn't realize it, you catch yourself in chop, you look back, say, "Oh crap, it's chopping sideways." Um, your target and stop probably should be almost identical. Does that make sense, guys? So write that down. In chop, try to stay away from it. If you catch yourself in a trade, you need to be lightning fast on moving the stop. What do we teach you guys? Early on, as you start trading with us, say you did take a long trade here, and let's say we got filled right here on this long trade, right? Let's say we got filled. You go up and get a couple ticks, and all of a sudden you look over here on the 133 and say, "Oh crap, this thing's consolidating." What are you going to do with your stop? You're going to get it into a positive situation as fast as possible. Okay, so write that down first. Easiest one. Either you're scalping, or if you're scalping, you're using the tick chart, which it's a little more advanced than basic training. You're getting out of that trade as fast or faster than you get into it, faster than you decide to get into it. And you're trying to take profits as quick as possible. You guys got that, right? Everybody write that down. You get in trade, you realize you're in chop, move that stop as fast as possible. You don't want to give back a lot of ticks. Okay. So now, the other two, range bound trading and okay, anybody want me to repeat that to take notes? Does anyone want me to repeat that for notes? We're gonna go to range bound trading and we're gonna do the fun one last. Purely directional. So range bound trading. Anybody questions on consolidation? It is a holy crap. I realize I got in this situation. Let me get out fast, take profits as fast as possible, and then be patient and look for, like somebody said earlier, the breakout. Even though we are still in an uptrend, this would be considered a breakout short, right, guys? Almost a tiny little fake out breakout, right? So got a little tiny breakout, fake out breakout there. So now we're going to back up a little bit and let's see if we can pull this up. We're going to mainly just focus on the 133 tick chart today because it gives you really clear, and I'm going to spread this out a little bit because it does give you really clear ability, the super clear ability to see where your targets and your stops should go. Okay. This is probably the long we should probably shot for here, right, guys? But that's okay. uh, I'm not going to sacrifice time in class to try to get a trade. Okay, we got to do. I'm not going to sacrifice our time to try to do a real time example. Is that okay with you guys? Am I good with that? Okay. Not going to sacrifice um, example to right now. Different range areas that we get caught in this. Um, let's use this first because these trades. We get over here, the market that pushes up for that sell. Say, look at how okay. First and foremost, your stop man and you're in the trade. Say, let's just say, hypothetically, you get in around 690. As swing point, we try to